you have an interesting idea. You know, in a year where many have looked towards buybacks potentially saving the day post early October, they don't seem to have been the remedy needed. Do you think that we're going to see the amount of buybacks in 2019? You're thinking maybe a big resolution for corporations would be a debt diet. Explain.
Yeah, I think corporations are actually going to have to go on a debt diet. We've started seeing that in this third and fourth quarter this year, where some companies with a lot of debt outstanding have had pressure. We've seen some dividend cuts. We've seen some stock buyback cuts. So I think we're going to see this huge shift where companies used to be able to use their balance sheet to enhance shareholder return. Now they're going to have to protect their balance sheet to enhance shareholder return. It's a big shift. I think we're going to be a big slowdown in debt issuance, which will take away some of those fears people have.
Now, that all sounds perfectly well. Whether they do it or not is another question. But flip the tables from an investor standpoint. Credit differentiation. Yields are going to be in play versus a volatile stock market. Is Treasury demand going to offset all the issuance we expect for 2019, in your opinion?
You know, I think it will do okay so long as the economy is doing fine. If the economy starts really heating up, I think we're going to see a lack of demand for treasuries. We're seeing a lot of what we're calling, digital moves in the treasury space, where you see these 5, 10, 15 basis point moves in a couple days. That's not necessarily healthy. So I think we're at an inflection point that either the 10-year has to get below 250 and the economy is going to be slow and grinding, or we get back above 3%, and then we could stabilize with a better economy.
Now, back to corporations. Even though they're not good market timers, all the buybacks are definitely most likely not in the black. We saw many articles hinting at that last week. But more importantly, that debt for buybacks, as you pointed out, still exists. And is that going to end up being a weight before it can be reduced? Is that going to slow down some corporate growth, in your opinion?
Yeah, I think it is going to slow down some corporate growth. I think corporations did the right thing. They took advantage of very, very low yields. They issued debt. They used their balance sheet. And some companies with huge amounts of free cash flow aren't going to be subject to this. But some of those triple B companies that are on people's radar screens as potential issues in the credit markets, I think they're going to fix their balance sheets. We've seen some of the big companies, if they just cut back their stock buybacks a little bit, they can reduce that leverage very quickly. So this is going to be about protecting shareholders. And just like any other New Year's resolution, though, it is not going to be easy for that follow through. The easy thing is to issue debt, make your stock go higher. This is going to be a change of mentality. I think it's going to be difficult, but I do think it happens.
And it's also may take a big buying turnstile away from the equity markets.